Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Edna Keep. Thanks for being on the show, Edna.
Thanks for having me, Whitney.
Happy to have you on the show. Edna is a former certified financial planner, discovered the power of real estate in 2007. Her and her husband, Warren, have amassed a $60 million real estate portfolio, primarily of multifamily and primarily with other people's money. So I look forward to getting into that. But since 2014, she has been training and coaching real estate entrepreneurs who want to scale their real estate business into multifamily with investor capital. So, I mean, that's what we're doing here. And I appreciate your expertise and being willing to get on the show and share that with the listeners as well. But tell us a little more about who you are and also where you're located.
My pleasure. So Whitney, I'm in Regina, Saskatchewan, which is central Canada. That's most people understand Vancouver and Toronto. Well, we're kind of in the middle of them. Small area. Our province is only about 1 million people, and we primarily invest in our area. Two reasons, because most of our family and relatives and everything else is here, and we've always been here. So it just makes it easier to understand the economy and everything else.
Nice. Okay, so you're in Canada. Have you always lived in Canada?
Always, yes. Yeah, okay. Always in Saskatchewan too.
Okay. Are you investing outside of Canada as well, or is it primarily in Canada?
Primarily in Canada. We do a little bit outside, but generally it's with partners. We're not the expert in those areas. We usually partner with other people that are.
Awesome. Okay, so I want to know a little about, you and I discussed a little bit before the show, this recent deal there local to you or in Central Canada, that we could talk about. And I want to hear more about the details of that deal and any interesting facts about it.
Okay, sure. So just over a year ago in April, we bought a vacant 12-unit building in our city. And the seller had owned that building for over 20 years. And he had it rented to a group which cater to disabled adults, mentally disabled adults. So not ones who have difficulty getting around, but just ones who can't function totally in society by themselves. So they kind of have care workers and stuff looking after them. And he'd rented it out for, like I said, over 20 years to this group. And they ended up building their own building. So it became vacant. And, he was kind of at the age where he just wasn't interested in taking a whole vacant building on. So we sold it at a really, really good price. We got it at $855,000. And it took us about 3-4 months to fully renovate the building. Like I said, he'd had same tenants in there for 20 years, so he hadn't done much. And it was all lipstick stuff. There was nothing major that we needed to do. Shortly after we owned it, it got broke into, and the boiler got wrecked. So we ended up with a brand new boiler through insurance too, which actually ended up in our benefit because the new boilers are more efficient. Then we took the task on after that of filling it. So we got it full and we started working on financing. And I work with a very good mortgage broker out of Alberta, and he was able to get us CMHC financing, which in the U.S. world is like Fannie Mae, Freddie Mac. So really good interest rate, I think like 2.72, 30-year amortization, got our numbers really good. But one of the interesting things that transpired in the meantime was we had actually bought that building under agreement for sale. And the reason is because you can't finance through a bank a vacant building. And the owner knew that. He'd been a sophisticated investor for many, many years. So he financed $600,000 of the deal, and we brought in an investor for the other part, which included all our holding costs, their deposit, and the renovations that we needed to do. So about a year later, we're ready for financing. We start working with the mortgage broker, only to find out that the lenders weren't interested in financing it at the new value, that they only wanted to finance it at the value that we paid for it. So, which really didn't help us a lot with our mandate, what we were trying to do. So I had raised a bunch of registered capital, and it was sitting at Olympia Trust, which is the holder, like the lending institution that holds it. And we hadn't been able to utilize the money for another deal that we were working on. So I decided, well, we'll use that money to purchase it outright. So that's what we're in the process of doing now. So we'll purchase it outright with basically cash, and then refinance it within 2-3 months, and then we'll get it at the new value, which is $1.3 million. So had to do it in kind of a two-pronged approach, but that's sometimes you just have to bounce when you need to, and regroup and figure, okay, what's the best way to make this work. So that's what we're doing now.
Okay. So anyway, many things there, you've elaborated on, but I wanted to even go back to how did you find this deal?
It came to us through a realtor who had worked with us very early on back in 2007 when we got started, sold us our first 2 properties. And then we just kind of parted ways. We needed to work with a realtor who was more open to offering no money down deals. And he was kind of uncomfortable with that. So we moved on, but he knew that there was a possibility with this one because he knew the seller. And that seller had actually financed one of our purchases back in, probably 2009, a tiny little, what we call a hood house, so in not a very good area. And he had a lot of properties like that, so we weren't really interested in staying in the hood house area. So yeah, it came to us through a realtor.
So you had previous relations or transactions with the seller as well?
Yes. Yeah.
Nice.
And what was interesting is we got the deal before it actually hit MLS. We made the offer, got it accepted, everything else. And they had dozens and dozens of calls on it after the fact. Like we could have flipped that property and probably made, $20,000, $30,000 within a couple of weeks. But we could see the opportunity here. It's in a downtown location. It's close to a hospital and close to downtown. So the other thing that we do in this unit that's a little bit unique is we Airbnb some of the units because it's such a good location for that.
Okay. Well, I've had more people ask recently about Airbnb and how, using that in a multifamily property, maybe that's commonly not used for Airbnb, but maybe we start using 1 or 2 units and see how that works. But, can you, there's a couple other questions I wanted to ask you, but while we're on that, can you elaborate on how that's worked for you so far?
Really good. We just set up, we're just setting up our second one, but our first one has been going for about 6 months now because we wanted to test the waters and see how it's going to go. They're all 1-bedroom units, so they're renting about $850 a month. Through Airbnb, we're making between $1,250 and $1,800 a month there, depending on what's happening in the city at the time. So it really doubles your income on your property. It's absolutely amazing.
Wow, doubles the income. So do you plan to convert more units into Airbnb, or is it like this balance of wait a minute, we want these 12-month leases here, or longer term leases, but then we're going to keep pushing this over here with these few units?
We're going to do 3 immediately. So we're working on the second one right now, and we have one coming vacant at the end of August. So then we're going to go with the third one, and we'll probably run that for a little while and then just test it. If we still keep getting really, really good response, we could see ourselves going 100%. We've got other buildings in the city that's long-term leases. And, unfortunately, we have investor partners on there that are kind of scared of Airbnb. They don't understand it. They don't want to do them. This building we own ourselves and another partner who's very forward-thinking and loves the Airbnb concept. We can see the future of it. So we'll go as much as we can get. And of course, you got to test the markets just to see. But our area right now under AirDNA, which is a way to kind of tell what rating you have, we're at an A-, which is a really good area, meaning it's not saturated or anything like that.
AirDNA. And tell me again what that is and why that's useful.
Well, they rate your property and your city on the viability of the project. So it's amazing what they offer on there. They can tell you what rates you should be charging every night, and depending on what's happening in your area. There's actually 2 of them, and sometimes I get them mixed up because I don't work on that part myself. I usually have partners. So there's Price Labs and AirDNA, and they'll rate your area. And then they also help you with pricing. So it's like more of a hands-off approach, so you don't have to be monitoring it yourself every day.
Nice, nice. Okay, so back to this property. What is the business plan long term with this deal?
Well, we buy everything long-term buy and hold. We're specialists in that area. Love it. We absolutely love mortgage pay down. Right now with our portfolio, we're over 25,000 a month in mortgage pay down. So that takes care of all our long-term stuff that we ever need to think about. And now, since we've got all that in place, we're just focusing on how we can maximize our cash flow, get our investors paid off as quickly as possible. And we really think that Airbnb, not every place is suitable. Airbnb, a lot of our units will really help with that.
Nice. Okay. So, as far as, I know even your bio mentioned, primarily with other people's money. Can you tell me, elaborate on how you all have used investors, how you've partnered with investors, what that's looked like? I know, in Canada, I know that like the syndication model is a little different. But, how does that work in your business specifically?
Well, generally, we bring our investors in as joint venture partners. They're silent partners, and we'll meet with them once a year. We send reports quarterly. We explain what's going on and give them the option to, we told them all about Airbnb in some cases. Some aren't interested. Some love the model. So we kind of give them a little bit of a say, not a ton. We usually are always the controlling partners in that sense. But sometimes you have to let people get broke in a little bit easier. But yeah, we use total joint ventures. We do a joint venture agreement. When we first started out, our joint venture partners were on title and mortgage with us. And now we're getting to the point where usually only one or two of us have to qualify for the mortgage. So although they're on mortgage and title, we're the ones that were responsible for the mortgage and that sort of thing. So
How did you initially start attracting investors to partner with you all?
I used to be a financial advisor, and when I understood real estate, I couldn't even sell mutual funds anymore. It was just like, oh my gosh, I can't even believe it. There's so much more control, so much more money. Love real estate. It's so much easier to understand. I like simple things. And a lot of people think that a lot of my clients came with me, but they didn't. I must have did too good of a job selling them on mutual funds. But just basically networking. We partnered up with somebody very early on who had been in the business about 2 years longer, and they had a bunch of houses. And they were actually already raising some capital. I was still a financial advisor when I first started, so I couldn't raise capital. So we partnered with them. That took a lot of fear out of deals that we might have been scared to do on our own. And from there, we just networked, and people started coming to us with capital, and we get people from all over Canada and US that want to invest in our projects. Just get to know them over the years.
How do they know about you? How do you, I guess, start that relationship? People from all over. Is that through social media, or how do you, how do you blast out about yourself and what you all are doing?
Well, initially it was just personal contacts, but eventually, email. I do a lot of Facebook Lives. I do a lot of podcasts like this, and people just get to know us. And then sometimes they follow us on Facebook. I've had people say, "Oh yeah, I followed you on Facebook for about 2 years. I know we understand your stuff," and then they start either become students or invest with us. We're actually finding right now that a lot of our students are investing with us because much like us when we started, we were scared of everything. We were scared of making that wrong decision, and just having a partner that had already been doing this for 2 years took a lot of that fear away. So a lot of our students go, you know what, if I could be part of a deal, understand it before I start raising my own capital for other deals. So we do a lot of that as well.
Makes all the difference. That's for sure. Makes all the difference. But let's talk about that a little bit. You're coaching others. You have students now that are, striving to do what you're doing, right? To build their own business and real estate. And what are some of the biggest things that are holding them back, from making that leap into doing their own deals?
I think fear is the biggest thing. And when they're dealing with investor capital, one of those fears is losing other people's money. And I tell students, you know what, when you tell me you're scared of losing other people's money, I like that. I wouldn't even take you on if you were one of those people that said, oh, I'm not scared of losing other people's money, whatever, it's their money, right? That's not the attitude I want people to take. That's more precious than your own, because they will help you grow, but you got to help them grow at the same time. So that's a big fear, getting over that. And then, getting the mindset of your worth in the deal too. Like, so many people think, oh, if I could just get the money, if I could just get the money. But there's lots of money out there. You're the one with the gold. And if you can get that mindset, that's going to make all the difference for you. And yourself, Whitney, there's a ton of people out there looking for a place to invest in real estate. They don't understand it. They don't know where to start. So they want somebody who knows what they're doing. A lot of times they don't have time to do it themselves. So that's where we come in and we can help.
Nice. And what's really been the hardest part of the real estate journey for you in doing larger properties and commercial real estate?
I love the wheeling and the dealing and the upfront and getting everything in place. And generally, I'm very hands-on for the first year of owning. But after that, that's not my forte. I have to have team members that can look after the building, keep it fully occupied, report to me, all that sort of thing. And that can be a challenge sometimes, because they don't quite want to do things the way you want to do them. And they just have different ideas. So finding the right team members is absolutely crucial. And that can be a struggle sometimes.
How have you eliminated that problem? Or, I'm sure it's not eliminated, but how do you go to find these teammates now that are, qualified and that want to do this job well?
Well, a lot of talking, a lot of interviewing, referrals is one. And sometimes it's just taking a chance on someone when, you get a good feeling about them, but you're not 100% sure. So you put them in a position that starts somewhere where they can't do any damage, and then work them into a higher position where they can really be beneficial.
I like that. So yeah, put them in a position where they can't do any damage, but where they can really show their skills, right? Or show their, I guess, a desire to work and if they're going to be a good fit or not, right? Before you give them a bigger task. That's awesome.
Yeah.
And so what's a way, Edna, that you've recently improved your business that we could all apply to ours?
I would say adding the Airbnb model to our portfolio. And we're doing it in a few different ways too. We've got a bunch of our own buildings, so we're doing some of that. But I've also partnered with a couple of my students who are doing a rent-to-rent model. So basically, we've rented other people's properties, one in Rochester, Minnesota, close to the Mayo Clinic. And that's good too, because again, I always feel I can't do everything. And although I've taken a couple Airbnb courses, I understand it, I get the whole concept. It's the day-to-day managing of it that I just don't have time to do. So I partnered with a couple of my students to maximize that as well. And we're really excited about that. One of our partners in Rochester has rented a couple one-bedroom units at $750 a month, making $4,500 a month gross income on those two.
Wow. So rent to rent model. And so I guess, are you all worried about like the, if the landlord is okay with you subleasing and things like that? Do you all check things like that, or is that important?
Make sure that they are ahead of time. Yes. Because, there's been areas in our country, in Toronto and Vancouver, especially, there's a ton of condos, and a lot of the condo associations are going, no, we don't want people in and out every day. It's a minimum 3 months or something like that. So yeah, you really you have to let them know ahead of time what you're going to do. And some groups are very supportive of it. Some people have been supportive and then changed their minds because of their owner associations and stuff like that. But yeah, you have to let people know up front exactly what you're doing.
So and I guess if someone is, I guess, showing they're against it, or maybe they're wanting you to stop doing this, I mean, you could offer them a little more of the pie, right?
Yeah. Yes. And well, and some landlords don't understand it because I've had students, even in our own area, they said, we've approached many and they're just scared of the whole subletting thing, and I think, yeah, well, that's why you need to study stuff, right, Whitney? Like I went in, I started taking classes on it myself. I've signed up for 3 different Airbnb courses because I want to understand it inside and out so I can present it to investors, so I can present it to potential partners, and so that we can do it in our own buildings effectively and make it done right. So yeah, you have to study it. You have to get to know at least 90% of the concept. You don't have to do the everyday stuff yourself, but you have to understand it inside and out.
How did you educate yourself about Airbnb, or how should we do that if we're looking to apply the same model?
There's many courses out there now. I've actually had people on my podcast where I've interviewed them that are promoting somebody else who offers Airbnb. One of my students trains on it right now. Other students of mine are actually, like I said, they're my partners. They're not training on it, but they're people that I can hook them up with to manage it for them, stuff like that. And right now, like I took 3 different courses, one through a student. I went through his so I could see if it was something I wanted to offer, and one through, or actually 2 through just fellows that I met at different networking events. And I seen what they were doing with it. There's a fellow out there right now who I studied with who started doing this 2 years ago, and he does 100% the rent-to-rent model because he got caught in the downturn in the US and lost all his properties and his ability to get financing. So he said, I'm not going to let that stop me. And so he does, I think at this point, last time I talked to him, he was making like 300,000, has started making 300,000 for the year. And he started that 2 years ago.
Wow. Just doing the rent to rent. So he owns no real estate. He's subleasing for Airbnb.
Yeah.
That's interesting. So, and I wanted to ask too. So, when you're talking to that landlord, is that something you're just reviewing the lease to see if it's okay? Or are you telling them like up front, this is what is going to happen? I just wondered.
We have to ask, like, is this something you'd be interested in? And in the case, we usually tell them that what we're going to do is rent their property for so much. And then, and ask them what their rates are or whatever. And that what we're looking to do is short-term rentals. And that, there's a whole business model to it. We have cleaners in after every single person's through. So we will take better care of your property than any regular tenant. We'll even take care of all the small repairs and maintenance. So, we'd probably be considered an absolute ideal tenant. And we're not going to let our lease expire. We're going to keep it going as long as we're making money on it.
Wow. That's so interesting. It's an interesting model. I'll have to look into that.
Yeah.
What is your, you've been working with investors for a while. What's your best advice for caring for them?
Always treat their money as if it's your own or better, because, a lot of those people are counting on you for their long-term retirement plans. And, there's stuff that happens in the market, as you know, Whitney, that we can't control. And markets go up and markets go down. So we always tell our students, make sure you explain that you don't have a crystal ball. There's going to be challenges, but even through the challenges, you can end up doing well in real estate if you can hang on and go through it. So let people know what those potential challenges are, but how the upside can take care of the downside.
Nice. And what's one thing, Edna, that's contributed to your success?
I'm not scared of risk. I'm okay with, whatever comes along. I have a thought in my head that whatever's going to happen is going to happen, and we'll just deal with it. And we've had stuff happen. With real estate, I don't think anybody cannot. So you just have to go into it with, we're going to make it work no matter what.
I like that a lot. And how do you like to give back?
My favorite way is working with my students. Like I love seeing them get their first big deal. I love seeing them raise capital and helping out a bunch of other people at the same time. So that's my absolute favorite way to training people on that, and then helping them with their mindset, because I believe that mindset's about 95% of your success.
I couldn't agree more. And you've been a great guest. And I really appreciate your time. I didn't see the Airbnb dynamic of this conversation coming from the beginning. But I'm glad it did. And we've learned a lot about that from you and how that has changed your business and many others as well, it seems. But tell the listeners how they can learn more about you and get in touch with you.
So my website is ednakeep.com, and that's how you can find me. I do Facebook Lives almost every day. I have a podcast called 7-Figure Real Estate, and I love sharing what I've learned over the years, and I love learning. So between those two things, reach out to me at ednakeep.com, and my Facebook page to watch my free videos is Coach Edna Keep, facebook.com Coach Edna Keep. And like I said, my favorite part is helping my students have success.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.